by like 2 minutes ago, coming off this last faux show moment right there over the VWAP, late day VWAP break and all that. That we're live. Good afternoon, YouTube and Twitter and all time and space. You're back at the Hit the Bid radio program, and you're lucky enough to be here with a special VWAPian.
I'd spend that show.
This guy. I'm just not even going to say a word. We'll recap at around 4, but I don't want to interrupt his flow. And he's a special part of what we do here. We never know when he's going to show up, and when he does, he never leaves. And he's taken what Zach and Brian Shannon showed us circa 2011, 2012, and has really ran with it. I use the 1 minute and prior day VWAP. My friend Solid here has created all different types of intraday parameters on VWAP, even a blue sky breakout uh, to gauge where a stock that's never been as high as it is. That's what a blue sky breakout is. And then also something called your mom's VWAP, your dad's VWAP. Everybody's got a VWAP. It's just fascinating stuff, and he's made it really just algorithmic. So I'm just going to give the floor back to him. I'll be back at 4 o'clock, and then we'll talk a little bit about earnings. Hopefully, you guys managed to sit through the chop of AMD. Obviously, our options are going to expire worthless in this unless this thing pops 15 points in the next 2 days. But we traded it very well today and last night, and offset the cost of those options. All right, I will fade back into oblivion, and I'll be back around 3:59. Take it away, homie.
A 3:59. What's up, YouTube? What's up, Matrix? We'll just call it the Matrix. We're all over time and space here. So, what we were talking about this afternoon a little bit when I came on was understanding the importance of your watch list primarily. And if, for example, as an example, we just kind of use the cues for this example, which is finding out the top dominant names of whatever index. You could use this with the SPY, the diamonds, the Qs. You could use it with your XLF, anything. But being able to put all of the names part of that sector, it's great. Hey, I like trading the Qs all of the time, but I want to be able to visualize the underbelly of what the cues and how they're performing. It's great to be able to, bring them up and go, okay, yep, they're trading above VWAP today. They look like they're bullish. That's great. But being able to see those subtle cues, pun intended, when something like a broader index is starting to maybe show less of a bullish nature. And what we did is we created a watch list with just the dominant names of the queues. Once again, you could do this with the top, like this list has the top 50 QQQ names weight by their weight, right? The dominance that they uh, they broadcast in supporting the dominance of the queues. So from this list, what we did is we created a column here that allows us to visualize each of the names on this list and their relevancy to VWAP or volume weighted average price. Now, this is coming back and saying, all right, which of these stocks relative to VWAP are bullish or bearish? So obviously the ones in the green here are all above VWAP or above what we consider fair market value. If you take anything away about understanding VWAP, it just represents where fair market value is of a stock. And you generally what you can infer out of that is where is the buying pressure, right? Is there excessive buying pressure above VWAP or is there selling pressure below VWAP? And a lot of times with these names that are exaggerated far away from VWAP, you can sort of start to get the notion that they might be a little overbought. And that's not always the case, right? Just because something's making new highs does not mean it can't go higher. And something that's making new lows doesn't mean that's, the end of the day and it's going to turn right around. But one of the key takeaways in understanding what VWAP represents is it is buying or selling pressure. And when there becomes an absence of, in this case, buying pressure at an upper registration, you can kind of start to think, well, if there is an absence of that buying pressure, where is the next place it needs to go to just go back to find out where fair market value is? So you can set up different time designations to be able to read into where that fair market value understanding is. So what I've done is I've taken not only just VWAP, and every platform in the universe should have VWAP. And if you're not using VWAP, find it and put it on your chart and start to understand it more than just a buy sell indicator. It's an indication of who's in charge of the stock. And if you can make that, if you can start to read into and understand what the sentiment of that represents, you can take then and break that into different time frames where you have the sentiment on the day. In this case, my green line here represents VWAP on the day, and we're looking at the cues right here. So VWAP on the day, we can infer from just glancing at the chart, well, relative to today, the bulls have been in charge of the stock. There was a small brief moment where that looks like they were, kind of selling off a little bit, but then they came right back. They tried to sell off, but there was an absence of selling pressure that caused it to go further south. And then when it got back over the VWAP, anybody who was giving, had the idea of shorting the cues this morning said, yeah, it's back over fair market value. And that's usually where the buyers step in. Then we got that confirmation that they were stepping in, and we've been on a tear basically all the rest of the day. But at some point, and I'm not saying this is going to happen in the next 10 minutes or even into tomorrow, there comes a point where an equalization happens and where you graduate to an upside potential, and then you just, the algorithms themselves are like, hey, yeah, we had buying pressure all morning, we got it up to this next potential, and this is where we're going to take profits at. And if you see where we just kind of pivoted late this afternoon was really right around the same place that we pivoted the earlier this afternoon around noon, where we got it up to a graduated level, and then the algorithm said, hey, I recognize there's a high density of volume at this level. This, I kind of talk about this like bag holder theory. At some place in time in the past, this was a very dominant area. And now that we got that price back there, the algorithms kicked in and said, all right, well, we're taking profits. Because what does it mean to actually make money trading, right? You can't just get a good entry and let it ride. You want to take profits along the way. And algorithmically, from one algorithmic range to the next, that's where you're taking profits. So if you see where the market pulled back this afternoon around 11, or this morning at around 11 o'clock, this was the I have a line drawn here. This is representing where the VWAP signature was relative to the January 22nd high. Just a few days ago, we had that high that got put in, and then we've had a pullback the last few days, and now we've gotten back above that. We did a price check on aisle 12 right here and said, nope, we're good. We're committed to paying at or above this fair market value price. And we started to run higher. In addition to that, we held the intraday VWAP signature. So with all of this information of just understanding where fair market value is over a multitude of time frames can start to allow you to really visualize when the bulls are in charge and when they're not. And with the orange line that I have here, this curved one, this is our multi-day. That represents where, basically fair market value is on a day over day basis. And that's derived by looking back here. This green line's the VWAP, where the VWAP closed yesterday. And then the orange line is just a continuation of that evaluation of fair market value on a day over day basis. So you can see where the VWAP ended, and then the multi day just picks up where it left off. It takes in the new information, crunches it, and gives us an ongoing trend to represent a day over day exposure to where fair market value is. So when we're looking at this chart, now we can just sit here and say, well, on a day over day basis, we're strong. Intraday, we're obviously strong. And then that leads us up into the near term information, being able to assess, let's say, over the last hour, where is fair market value observed over the last hour? And are we remaining, when we're on a significant uptrend like this, in the near term, we can find out if the bulls are still in charge or if there's a profit taking event. And when we see on an uptrend like this and we get back to the hourly representation of where VWAP exists. Then we have that other little piece of information saying, all right, over the last hour, we were bullish. Now we're taking a little profits. And if we have a significant pullback and we can't stay above the near term VWAP signature, that absence of commitment up here might turn into a regression back down to where the last place that they observed where the buyers had stepped in. And that's where you can start to use the hourly here to start setting those benchmarks, which gives a lot more credibility to these prior pivot points. Because not only when things pull back, they generally pull back to a prior near term pivot point. But there's a subtle difference when you're on an uptrend like this and you break below a sentiment indication, like the hourly VWAP in this case. And it's just one thing to break below it a little bit, chop around and come back and continue your upward trend. There's a distinction, though, that this was consistent buying pressure with some profit taking. But when you break below it and then you break a near term pivot point under your sentiment, then that gives it cause that it has to come down and check the next pivot point. All the while, it's just asking a very simple question. Are there buyers willing to step in at this level? If not, no big deal. We're going to just graduate down to the last place the buyers had stepped in. And if they're not there, then they're going to come down to that next area. And if they're not there, it's going to come down to the next one. So on an ongoing basis, you're constantly asking of your chop that you're visualizing, are there buyers at this area of support or not? And that's really going to help make sense of what the chop is. You've got things that graduate up to a very specific level. In this case, this is a macro level derived from daily charts, and I'll show you that in a second. But we're getting this little pullback now that broke under sentiment. Doesn't mean we're going to zero, but what it means is there's an absence of committed or continued buying pressure for the moment at or above this level. And if there's no buying pressure and there's some profit taking, it's going to keep coming down until it finds, hey, are you guys committed? Do you want to step in and buy the dip here? Yes, no, no. Okay, fine. If you're not going to be committed there, then you're coming here, right? And all the while, we understand where these dominant ranges are. And when you get one to fail, the potential is you're going to just go down to your next dominant area of support. That could be a prior day's closing price. It could be all the way back down to fair market value on the day. Now, when we're doing something like the Qs here, we're monitoring the posture of the overall names in this ETF. So we can see that we've got some small graduations of the green, or excuse me, the red spreading here, right? Our dominant names on the Qs, you got your Google, your Broadcom, your Amazon, your Palantir, your Adobe, APP, Tesla, MSTR. These are the real heavyweights of this ETF. If they're not playing ball going into the close and they're progressively getting worse, that's why you're going to start seeing these pullbacks on the Qs themselves. So it's a marriage between sentiment and that next range that's observed on your charts, and asking that question. Well, for the moment, sentiment saying there's an absence of committed buying pressure. Okay, so there's one piece of the puzzle. The next one is, how are we holding supports when we do pull back? Are they being held and challenged and having reversions off of them, showing that, yeah, there's a little bit of buying there? Maybe, maybe not. And if not, it's just going to, process is going to continue. So with the way this is shaping up now, your next real dominant area is going to kind of be down in this range right here. So I would foresee, if we're going to get any kind of bounce here going into the end of the day, where this is going to pull back to is probably the last dominant area that it kind of pulled back to and then recovered, and then started putting in a series of higher lows until it got up to this macro level. And a lot of times when you make your way back to a macro level, doesn't mean that's the end of the story. And we're not going to eventually go to 540 on the Qs, 445, 45, I think, somewhere up there. I've got this really high level up here. It's never been there before. Um, but a lot of times when you hit a macro VWAP signature, you're going to hit that, and then you're going to revert back down to at least test the day's session VWAP. And then after that, if that holds, and then we come back and we break like this 526, let's say tomorrow, then we're going to be just heading up to that new upward trajectory. In this case, if we break back above 526 sometime tomorrow, we're going to 530, 529.57. And we can map all of this out the same exact way by looking at our longer term observation, our daily chart. Let me get a naked chart on here. This is what Kenny was alluding to about being able to identify algorithmically where that next destination is above a blue sky breakout. So back in August, these levels gave us an indication of where we were going to go in the after all-time highs, where we were going to go before we start to get a new pullback. So if I go back in the time machine, I can show you where those levels were. And that took us back to like August 2nd, August 5th. And back here on August 5th, the algorithms got crunched and said, all right, well, if we're going to start a bottom here, which we did in August, we saw that turn, right? And at the time, there was a very significant VWAP level saying, hey, after we started selling off in July, and when we hit that bottom, that there was a VWAP signature there that said, hey, this is kind of max potential. If we fail that, then we're probably going to zero and they're going to let the whole market crash. That's never going to happen. And that's a whole nother conversation. But right down in here in August, we had a huge influx of volume for the year. And that readdressed, reassigned, recalibrated, recalculated all of our new trending areas of support and resistance. And the next upper macro level was going to be this 539. What did I have actually? 539.63. So knowing that when we broke out the all-time highs from July at some point, we were going to progress to these upper levels and they were already there. And what's amazing is when you know these levels are there and they're developed from an algorithm standpoint, you know they have very subtle reactionary events that happen when they get there. And when this thing hit 539 that day, we turned around and we were like, listen, we've already hit kind of a max potential in the market. Now we're expecting not a crushing, but we're going to be expecting a very significant pullback just to come back down to where the prior fair market value was area. And that was called out to be 513. And where did we pull back to? Right after that high volume candle came in, right at there, I think it was a Fed day, the 20th, the 18th or something, bang, right back down to this 513. There was a level there built for us. So if we know all the way in August that eventually we were going to get up to this yellow line and we were going to have a pullback off of it, guess where the new yellow line is? And it's slightly lower this time, to be fair. All of this chop we got going on here, if you go back and look at something like the Qs, the majority of the time you have a chop fest that turns into a small sell off, and then you get a bigger exaggerated move. So we're kind of seeing that now. We have a fresh high. We've got this little chop fest going on here. And the next time we break this high, the first thing that's going to happen is we're only going to go up slightly higher and then have a pullback and then make sure that holds and then look for the bigger follow through. And then we're going to be talking QQQ 600. But where the all throughout the course ongoing, you have these high volume events, these high volume algorithmic events that trigger. And what you can do is map out your future expectations. It's not telling you, hey, on March 13th, we're going to this price, but it is telling you that when you get there and an all-time high breakout, these are your expectations. And the way that the market's recalibrated right now is telling us once we break those highs, we're going to have trouble getting through 540, 587. So we've already had a dip pullback off of the all-time highs. We've had a couple of recalibrations along the way. The current manifestation of these algorithms are dialed in for these specific levels now. And ever since it triggered, they've been holding them damn near exact. So now the next order of business on any, ongoing day or move is to get ourselves to each one of these levels. Now we've just come off of a pullback the last 3 days, and we just graduated up to this next little profit taking zone here. That's why we hit it today twice now, and we're getting a subtle pullback off of it. Now, if we get any type of major pullback, we do not want to see the market go back below 523.20 anytime soon. That's going to nullify the fact that the bull market's kind of not really taking hold just yet. But if we can stay above that and we reclaim this level by tomorrow or going into Friday, our next expected move is going to be up here to 529.66. And then when that breaks, you're going to have anybody who hasn't decided to get back in on the market. They've been on the sidelines. They're going to be chasing this thing up to that all-time high range. Now, just the crazy psychology of the market is hey, we're going to all-time high. So everybody's in their brother and their sister and their furry and their pronouns and their cousins and their uncles and their aunts are all waiting on that 539.15 area. What they're going to run into is when we break this dominant level here, we're going to get up just into that high range, and everybody's going to be buying calls, looking for 540s and 550s, and they're going to chop us to death here for a little bit. And then it's going to start to work, right? And this is where it gets crazy. It's going to break these all-time highs and it's going to migrate up to where? 545.87 ish, right? We're going to give that a little slippage. We're just going to say 545.50, 545.85 area. And once it breaks out these all-time highs, everybody's going to be buying those 550 calls and all that $600 calls thinking we're going to the moon. And we may, but we're always going to be respectful of the rejectionary, reactionary events that these algorithmic levels provide for us. So now that when we do finally get this thing to kind of break out of here, we're going to see a very quick move, by the way. If we break the top of this 529.60, it's going to be nobody's business just to get us straight to 537. And once that breaks, that's going to put us in the range of breaking the all-time highs. It's going to start to break out. And then when we hit this 545.85, we might overshoot it a hair that day, but we're probably going to close at or under that level. And then the following next 2 days after that, we're going to have a retest of this all-time high area. And then after that, we'll provide a new upgraded forecast on where we're going to be headed from there. So I'm going to drop this current chart. These are going to be your macro levels for you to consider for the next few days, just so you're aware of where your dominant areas of support in the market are and where you're going to expect the cues to go to next. And you know what's really beautiful? If we break that 545, guess where it's going? 562, 578. And then we're going to be looking at the 600s, because once we break and do the little shuffle up here for a day or two at 545.85 and we decide to re-break that, we've got these upper levels are where the algorithms are going to take us to, have a pullback profit taking event, hopefully have a shallow cut, come back, and then start taking out these next ones. So here's the next broader scope. Once we get through the shuffle of all-time highs, 539.15, and that slightly higher level, 545, our next trajectory is going to be 562.24. But that's not until we do some of these little price checks on aisle 12 around 545.85. And now that you got some of these macro levels plotted out here from the daily perspective, when we come back into intraday, not only do we have our intraday session levels that kind of help us define where the market is and where it can go on any given session, these macro levels kind of help us define where all of our intraday chop is going to exist and what we really need to claim to either go higher or maintain not to break down lower. And right now, we're on the uptrend of that area there, that 526.33. You see how intraday today we came right in and hit that level and then pulled back off of it. We hit it twice, three times. Now we're getting a little retracement off of it. So that's going to be our dominant area to go. We've just gotten through quite a bit of our dominant earnings reports. We've got a few more coming out the rest of this week and into next week. And if a lot of those kind of start to solidify and start holding their own, I don't see nothing but uptrend on the cues. We've already kind of shook the trees really hard. We've had some really nasty pullbacks that have been met with a comeback, closing above some of these recent dominant ranges right here are going to give us the idea that we're going to at least shoot for those next upper levels. But as the day unfolds here, it's nice to see that we're closing above that dominant macro level. And if we can maintain a bit above that over the next few days, we're thinking Thursday. I'm sorry, not this Thursday. Probably by midweek, we're going to be trying to address those new all-time highs. That all being said, if the Fed comes out and says something dumb, the president comes out and changes something about our politics and tariffs or something, that's a whole different ball of wax. But knowing VWAP and knowing how to build levels and ranges and understanding the definition that VWAP brings to your trading strategy, it simply just allows you to understand who's in control of the stock and then where you can start to define the next targets, because profit taking is just as vital in trading as it is understanding where your stops are. Right? If you're going to obey with huge discipline where your stops are, you also, with just as much discipline, know where you need to consistently taking profits when things are working in your favor. And if you do that, you're never going to go broke. God, I love VWAP. And look at this. Look how we're closing really strong here. VWAP, bap, bap. So even going to the end of the day here, we've got a lot of volume coming in, and it's kind of setting the benchmarks for where we're at. Obviously, just appraising the day. And here's one little takeaway: if you're kind of a swing trader or long trader, you can use VWAP also to manage your long positions. So we'll make it another little excerpt. We'll do another installment of how to appraise, say, a portfolio using VWAP and using the same sentiment identification processes to be able to understand whether you should, continue to hold something for a longer term or cut the dead weight out. But for example, just a swing trade, you only have permission ever to create a swing trade out of a winning day trade position. And if you did find yourself in a good entry on a day and you've been holding it all day and it's closing exceptionally strong, the key factors that you want to take away from deciding whether you should hold something overnight is this: if you are currently trading above your VWAP, you are currently trading above your multi-day, you're currently trading above your prior day's closing price, and you're trending into the end of the day, and maybe you're lucky enough to have the hourly VWAP on your system. If you're above all of those sentiment indications, you can give yourself permission to maintain a swing trade, hold something overnight. All the while, you know, wherever your VWAP closes tonight is going to be where your multi-day starts tomorrow. That's got to be your stop on your swing position. As long as you're staying above your VWAP on a day over day basis, you can maintain that swing position at any time going forward relative when you entered something. If you have the multi-day, anchor it to your entry point, even on a swing trade. Let's say you initiated a long swing trade on the Qs starting today. Go back and anchor your intraday or your multi-day VWAP to today's date, and going forward, as long as you're staying above that VWAP signature, you can continue to hold that idea. And I think Mr. Glick, the warlock, Kenny, is going to come in here now and wrap up our 4 o'clock.
Did you just sense my presence as I rolled in? That's incredible. What an intro. More importantly, other than me just rolling back in, tell me you're stuck with the Qs and the AMD into the close, right? So all this chop is a bunch of bullshit. We're in a perpetual bull market. And again, this is one of those days where predominantly the first 2 hours of the day, the market tried to pretend that it was going to go down today. And, the easiest thing to do is you go glance over at UVXY. If UVXY is not green and going higher, then all selling, for lack of a better word, is bullshit in a bull market. I'm a bear trapped in a perpetual bull market. I've learned from my mistakes. And now you see this rip right here. This is, I'm assuming you guys have to be in the 526 calls because you got the dip and now the rip. And when I talk about 10 baggers and we find them all the time, these are the plays. This is where you throw $100 on something at 20 cents. You buy yourself 5 contracts and they rip into the close, and now they're trading at $1.20. So you bought 5 contracts, even for 20 cents. What'd that cost you? $100. $100 rips into the close, and next thing you know, you got yourself a nice little payday. So here's my chart, by the way, if you're looking at it. And again, this endeavor that we do on a daily basis, it gets less and less daunting. And I'm never going to use the word easy anymore. It's never easy. It really isn't. We sometimes there are easier days. Some
It
days
gets
you have
easier.
you have to grind it out. But when you stay focused on one symbol or 3 at best, you could stay focused. And when you start jumping around, and today I traded a number of different symbols: SOUN, Disney, Uber, AMD, Palantir, Qs. But there's something similar on all those. They all had either news or they were in play. And that's where you want to stay. And again, the AMD play that didn't work, or it's not working right now if you held those options, was paid for by today's action. And now today, our classic trade is this blue line to the orange line. And it took a long road to get there, and wanted to try to get you out in the middle. And by the way, ARM's reporting tonight. That's a semiconductor, big fan. Not in it anymore. Well, I'll show you some earnings in a second, but I just want to show you this AMD trade. Look how long it took and how many chops you had: 106.50, 108.50, 106.50, 108.50, 106.50, 108.50, 106.50. If you see something hit the same price 6 times and not break, you know what that is? Support. So even though these were annoying trades, these were money-making trades, because we're buying the consolidation break and we're selling into the move, and then we're using VWAP on the way back out. So yeah, we got chopped, but they were profitable trades because our style is to sell some, raise our stop to break even, and if it rolls over, you get stopped out at break even. At least you've taken some profits. But look what happens after all the chop. And this pattern that emerged is your Andy Dufresne on a shorter time frame. As long as the stock stays in the muck but doesn't break down, and the peaks of those moments were the 1750 area. Boop, boop, bap, boop, bang. And if you were listening to my pal over here, he talks about the jiggle or the shuffle when the stock gets to the VWAP, because it's making a new decision, just like ARM just made a new decision to get crushed after popping 11 points. It just gave back the whole thing in one candle. That's what happens during earnings season. And we'll plot that in a second. I'll show you how we're going to trade it tomorrow. But this is all about being patient and knowing that the market is rigged to get from today's VWAP to prior day VWAP. Look how it took all day to get there. And in the midst of that move, and if I was around, I would have done this trade. We trade price. A lot of people talk about moving averages, RSI, stochastics. We trade VWAP and specifically price. So when I see a candle high right there at 108, what is that? At the 109.43, and then it comes back and it tests the 109.43 it's the same exact price, the high of this candle and the bottom of this candle. That's a very significant moment. I draw the line right there. And look where it came back to say hello to its friend at 1943. So what do we just say? If something's holding support, it's not about moving averages. The market's programmed, and sometimes it's a 1943. Usually it's at 1950 or a half number or a whole number. But when you see something so bizarrely accurate like that, take the trade. It came back to test the 109.43 and it holds. You don't have to be the guy that buys it at 109.43 because you want to wait to see if it holds, starts to rally, buy it. So now if it breaks 1943, you got to get out, and that's what we call a hard stop. So if you got like a triple bottom and it breaks that, usually we get the hell out of the whole trade. And in this case, maybe would have let it breathe a little bit because you got VWAP under there. But just in case. You see, sticking with the same symbol, you saw the stock. You knew all the prices. You became intimately familiar with the stock on the day. You knew that was a good price. Why not buy it again there? And then you make that extra $1.50 for the day. And again, as a day trader, let's not forget what our goal is. We just want to get paid. It's nice when you make 1 day's pay. How about making 2 days? How about 3 days? My goal for the day is usually just $300. I know that's not a lot of money. It's nothing a lot of people can even live on, but that's my goal. I want to just make sure I'm being consistent. So if I make 600 today, I feel like I've just worked 2 days all rolled up into one. All right. So let's go look at what's happening right now. So what we do best in the Hit the Bid room is trade earnings reversals, because that's where most of the volume is going to be for the day. So going back to the AMD, Disney, Uber, Palantir, what's the coincidence? They've all reported earnings within yesterday or this morning. And that's where we focus our attention, because VWAP, volume weighted average price, works better when there's more volume. And that's during earnings season. So let's go take a look at one of my pals, ARM. And we were talking about this at the JC event. One of the most consistent trades, and I'm glad somebody actually brought it up, is just buying stocks of IPOs that break all-time highs, especially if that all-time high is, close to that opening range. And this was one of them. Again, you don't have to even know what the company is, but, typical IPO, you'll get the pop the first day, and then the profit takers show up. So usually a lot of the times, and I'll show you one that wasn't that case, a lot of the times near the first couple of days is going to be your high. Then the profit taking comes in. Remember, the insiders are not allowed to sell, but of course they have offshore accounts and stupid cousins and nephews that they could hide the money, and that happens. So they're dumping, they're taking their profit. And look what happens. This is the ARM trade. You got your fake out, and see how it works. If you know how to trade on the day, you could trade any time frame. So this is a bigger time frame. This is talking about months, if not a year here. Fake out, shake out, back above that level. There's a multiple time frame VWAP breakout. And here's where I bought the stock when it broke back above all-time highs at 69.50. And we had some fun with it. Made 10 points. It came cratering back down. And, again, after that earnings report came out, I wound up buying it again, because stocks that break 50, that go to 80, almost 90% of the time go to 120. And where did it go? 163. And that's why I still have Palantir. I'm loving it, and I still think it's going higher. So there's the history of this stock. So now it's just been what? It's basically one massive consolidation. And again, I still like the stock. And I'll tell you right now, you see what you're seeing here? This is a Kardashian. This is an Andy Dufresne. Even though the stock is awesome, it's still Andy Dufresne since that massive move. This is a year ago. So this stock has basically gone nowhere in a year. Put this on a Post-it. Put this on an alert. Do whatever you got to do. Tell your sons, your friends, your cousins. When you see this stock breaking 188.75, buy it, because it's going to 250. All right, now let's go back to the day trade. So you got your first knee-jerk reaction. Knee-jerk reaction, remember, is always intense. You get that earnings per share explosion, whether it's up or down, and then you get the counter trend move, and we start plotting. Let me just show you what I'm doing here. I just plot the highs and lows of the candles from these massive reactions, because as I just showed you with AMD and all the other trades, it comes down to these specific prices. And you're seeing something right there. Look at that. That's 158.75. That's 158.85. So you already got yourself sort of a double bottom. Weird price. Not a moving average, just two candles flirting with the same price. Third one, next thing you know, just like I was explaining, if you see something happen twice and it holds, buyers tend to show up. And look at this move. That's 158. Well, let's call it 159 just for easy math, to 164. That's one candle, home slice. So tomorrow, again, I'm not really trading in the aftermarket too often, but these ranges that form tonight, and again, there'll be a new conference call, the due diligence and the analysts. You'll have a lot of different activity in the aftermarket, the upgrades, the downgrades, the buybacks, whatever they have to say. But these motion and all these ebbs and flows and rips and dips and rollovers create the pattern. And then we, as pattern recognition traders that use VWAP, we then stalk our prey tomorrow. The patterns show up. If that pattern that we love, known as the faux show bro, happens underneath the VWAP and you break VWAP, 9 times out of 10, you get a very profitable trade. And then if you break prior day VWAP after that, 100% of the time over the last 2.5 years, I know that sounds silly, but it's a very specific setup. So you need a stock to be down under VWAP, break a new low, come back, break the VWAP, break the prior day VWAP, and then go green. We see it all the time. And when they appear, the trade works. So far, since I would say close to 3 years now. The last one that didn't work, the stock doesn't even exist anymore. The trade works very, very well. And if you could just stay focused on this setup, and again, we are VWAP traders, but we're also the universe's #1 pattern recognition traders in this room because we've been staring at screens all of our lives. All right. So anyway, you're starting to see already the buyers are showing up, right? Now later today, let's say this triple bottom does hold and it comes flirting with it again and holds again and chops around in the lower range. That would be the setup for tomorrow, meaning breaks over the tops of those ranges once holding the bottom. And again, the better you get at and the more risk you understand, you'll buy it ahead of schedule. You'll buy it while it's making the move. I like to see stocks break, come back and test that range that it just broke. That confirms the buyers. I don't mind being a little bit late. And, one of my favorite sayings is I'd rather be late and right than early and wrong. All right, so we'll come back to the ARM. I'm sure there's a couple other stocks that are reporting earnings. Let me go check my list. What do you got, buddy? Let's see if
Sim is kind of cool. What was the one that a little small guy here? APPS. QCOM's out. Monsters.
Oh, QCOM. That's definitely one to watch. Yeah. All right, same kind of looking chart as the ARM. First pop, and then a drop with a double bottom. See how this one held the double bottom, recovered over the VWAP, and you're starting to get some buyers. This would be one of our trades. So when we see a double bottom, then it breaks back over the VWAP, we're buyers. And then we just use the double bottom as our out if we're wrong. In this case, let's say you bought 174, the stock's up to 178. That's the opposite of wrong. But now again, you see how it's kind of forming this range right here. All these ranges, tomorrow the VWAP's fresh and exciting and new. And by the way, it's only 412. And if you're long the Qs right now with these options, maybe you didn't know. Let me show you something awesome. Trading these daily, weeklies, these zero-date options, they stay open till 4:15. So this last little blip up here, you're still getting paid on those 526s. And look at this monstrous move. If you didn't know, they stay open for another 2 minutes. And look at that. Even if you didn't get that first move, they came back to about 50 cents. They just ripped right back to $1.30. And by the way, that's a way to play these. So if you know there's somebody important coming out that'll be influential on the QQQ, that's when you really want to take a shot, especially in the bullish market that we're in right now, meaning you buy those options at 4 o'clock for 2 or 3 pennies. And then if something that influences the Qs come out and the Qs start to rip, you still got 15 minutes to play that option. That's why if you haven't noticed, a lot of companies report 4:15, 4:30. The market never wants to make it easy on us. But every once in a while, you get these 4:05 reports, or sometimes right at 4, and the Qs are very much alive. All right, so you got ARM, Qualcomm. So let me go look at, I don't know if anybody cares about Ford anymore. This stock is just a dog, which I like it now that it's under $10. I like when people are starting to give up on stocks. That's when they do tend to have miraculous comebacks. So yeah, right there, we're already setting up for a trade tomorrow. It hit 934, bounced to 960, chops around in this bottom range, breaks the 960. Then you look for it to get back into this big candle. That's only 10 cents away right there. And then you look for that recovery. By the way, what did I say the Qs would probably close at? Look up. 527.50. I'm off by 8 cents. Let's see. I'm up. There it is. We just got it just in time. Right it, guys. Do you believe that? Right at the 4:15 mark, we hit the 527.50. Market's rigged. And also to my friend who said I thought I was staying short the Qs unless they broke all-time highs. Yeah, no, I can never stay short the Qs. I've learned my lesson the hard way. Hey, here's an old favorite, Kirk. You guys know about Kirkland? Even this stock got caught up in the meme craze for a second. I don't know why. This is Kirkland. They're the Sam's Club, I think. No, they're the Costco generic brand, or maybe Sam's Club or PJ's. I forgot. I own the stock because the name was Kirk, and I'm a big Star Trek fan. This thing actually woke up. Does it have news? Liquidity strengthening strategic partner. Oh, it actually does have news. And by the way, you see how a stock has news? It's getting ripped in the aftermarket. And where does it go? 250. Market's rigged. Right? These numbers come up so much. It's not a coincidence. That's why 527.50 is big for the Qs to stay above now. And, we're probably going back to 530 tomorrow. All right, let me give you a couple of ones, and then I got to skedaddle. SYM, right? You guys know about this one? Not a very popular stock. It's popular enough. And again, here you go. You already got your double bottom in the pre-market. Let me get rid of these red lines. Those are where I traded it the last time. Double bottom, triple top. Huh? You already got your trade for tomorrow. Breaks a double bottom, this thing's going lower. Breaks a triple top, it's going higher. So right now it's in limbo. So I don't even know what the stock is. I forgot. I actually have no idea. I can't even comment. But let me just go take a look I think I'm thinking of the right stock. Oh no, maybe I'm thinking something different. So what you're looking at right here, that's a 4-year chart. That would be considered a 4-year VWAP. I like looking at long-term charts just to get a feel for where the stock's been. All right, now go back to the 1 minute. That's today. Yeah, I mean, this is exactly what we do. You just prepare and get familiar with what you're going to do. And then tomorrow you go back and you check the chart. Hey, what's SIM doing? All right, still in limbo. What's AMD doing? All right, cool. What's the Qs doing? All right, nice. Let's look at Qualcomm. All right, take a look at ARM. And you got 7 or 8 stocks to rotate. We'll throw Kirk on the list just for fun tomorrow. See if that thing can break over 250. Let's go check ARM again. And by the way, you see EA on the bottom of my scanner. Remember that day when we traded it? When they were just giving up on the stock? Nobody wanted it. They got downgraded. Bad guidance and whatnot. It hasn't had a lower tick since that day. And I think Straza was talking about that too. And with Spence one morning about usually when all the bad news comes out, that's the end of it. And people say, how come the stock went up on all this bad news? Because it's already been priced in, right? And look, since that collapse, what's it done? 15 points higher. All right, so this PI is going by. I'm assuming they reported earnings also. If you're that active in the aftermarket, you might have an earnings report. Let me see. You got O'Reilly up. Of course, PI did report. So PI, I want to take a look at MetLife in a second. So here's your PI. Woo. Okay. Now that is nasty. Wow. That's a $125 stock that just went to a whole number, by the way. Market's rigged. You see? You see what I'm saying, my friends? You see what I'm saying, warriors? You got a stock. Maybe you've heard of it. Maybe you haven't heard of it. They just reported earnings. It's getting hammered in an aftermarket in the most volatile moment of its life, and yet it still goes to a whole number, and that's where the buyers are. The market's rigged, my friends. Don't ever forget it. And now tomorrow, just like any other stock, I don't know what PI is. Don't care. Probably some Chinese stock. I don't know. Or maybe not. I don't know. But that is something I want to buy already. Now, I don't just jump in because the stock's down 27%. There's a reason it's down 27%. But in a perpetual bull market, stocks that are down 27% tend to be bought tomorrow. But look at this nastiness. Something's really, really, really broken here. So you had this massive blow off top at 240 just October, and now you're trading below the 3-year VWAP. Wow, that is nasty. But right there is where it pivoted off, and that's still down 10 more points. So this thing could fall another 10. So tomorrow I come in knowing it could fall another 10 points. So I'll definitely be stalking that, and I put it up on the scanner so we don't miss it. And each morning you get your watch list, you have my charts, you have my scanners, and it's very difficult not to be familiar with what we're looking at, because you get your email in the morning, you know the watch list, you know the earnings. We do these afternoon sessions. I'm here starting tomorrow at 8:30 in the morning. We start reviewing and taking a look at where these charts are. And again, this is not the kind of stock you want to be trading in the aftermarket. Obviously, 3-point spread, not that much volume. You'll get killed on this if you tick it the wrong way. Look at that. That's a 7-8. That was now it's an 8-point spread. They don't want you buying the stock. I mean, that's just nasty. Don't do anything with this thing. But let's say if it was tomorrow's session and you see it holding a big fat whole number like 88, and then it turns and breaks 90, you buy it at 90 using a 2-point risk. And in this case, obviously, it would have worked. And look how you just got back. You printed the same print from there. Coincidence? Yeah, it's all coincidence. 105, 105, 88. So that's a pretty sick range we're in already. Let's see the top of this candle right there. Oh, 98. So there it is. 88, 98, 105. We already have 3 significant prices. So now if you're looking to buy like me, the last thing you want to see it do tonight is break the 105 and close this gap, because that could be our trade tomorrow. You see this gap? Just bang, it just got smoked. You break this 105, you're going to close the gap. That's 112. That's a 7-point move. But tomorrow when you walk in, hopefully it's down near 90 so we can get it really, really cheap. And I'll be definitely looking at this one because I love when stocks are getting hammered. And again, look, AMD wound up getting hammered yesterday, and it took some effort to get something out of it today, but we did. Why you call it a job, right? It's a fun job. I mean, as miserable as I get as a trader, we're all miserable because, today, and I'll be completely honest, I fucked up every trade I did, yet I made money. Every trade I got out of today could have been, I'm not going to say shoulda, because I had my reasons to get out, but every trade I got out of today was worth more, and a lot more, especially, the Disney trade, the AMD, the Palantir. So, I felt a little bit, lost. And what I did today was I addressed it. And again, what I do best is I keep a trading journal in my head. Everybody should do it. When you're doing a trade, after it's done, write a couple of notes. Even take a snapshot of the screen. Here's where I bought it. Here's where I sold it. What was I thinking? And then I sold some here, and I got out of the rest here. This is what I was thinking. Oh, I was wrong about the way I thought. I probably could have done this. Sometimes there's nothing more to do than get out. The trade just not work and rolls over, and you have to sell it. Or if you're short, you're covering. But there are times where you just, you screwed up a little bit. My screw up was putting a tight stop on the rest of my AMD when I had a pretty good entry. I sold, 108.50. Well, was it over here? And I was like, all right, I don't want to let it break 108.50 again. And it broke 108.50 again. And I wound up selling on that little blip. And I never bought any more back until, later on I gave it a shot when it broke another whole number. But you should always review. And, again, a big part of what we're doing in here, it's not a pick service. This ain't Glick's picks, right? We want to show you winning trades so you can learn how to find your own winning trades. We put you in front of the greatest trades there are, is the bottom line. And we do it every day. And it's going on, since we've been doing this 07 with me and my partner here. And so far, so good. And we're just going to keep on keeping on. And basically over the last 11 years now, we are only doing this trade because we found something that works pretty well. And, with all the cliches of trading, you have something that works, do that. And this one, a lot of people talk about tweaking and finagling and changing styles. No, we've just gotten better at it. That's it. It's still VWAP. It's still range breaks, still pattern recognition. Faux show bro, Andy Dufresne, blow off top. A lot of the patterns that most people are familiar with, but when you add the VWAP to it, you know you're on the right side of the trade. It helps you with the confidence. And sometimes that's all you need. You just need a little boost of confidence that you're doing something right. And next thing you know, you're a good trader. This PI is going to be fun tomorrow. I can see it already. I can see it already. Let's check if this thing has options. It looks like it's a scary stock the way it's moving. But again, pre-market's a little bit different. No. Aftermarket's a lot different from the regular session. Anyway, I'm hoping it doesn't break here because I'm definitely not buying it. But just watch it. You know, when you break this 105 double top, I would not be surprised to see it just go ripping 7 points. All right, let's go take a look at Qualcomm because that's obviously doing something. And then I got to skedaddle. Okay, so here you go. Perfect scenario, right? This is typical. Same thing that AMD did. We're all excited. Next thing you know, you're not excited. Then you're excited again. And then you're really not excited. But what this became is a 1 minute. In this case, the multi-day is kind of colliding with the 1 minute. But you got yourself a 1 minute multi-day VWAP reversal. And that would have been our trade for tomorrow. So shorting it at 174.50, having it crater down to 169. Know what that is? It's a living. It's a day's pay, maybe a little bit more. And by the way, look at this bad boy sitting at 105 now. I almost want to buy it. Now, if this was tomorrow, I'd be in it already. I'm talking about the pie trade. So, you know, again, it's already broke back above the level where I would have bought it. I'd be in this thing at 98 right now, selling it to you at 104, and then putting a stop in the middle at, let's say, 100, and hoping to see it break. But aftermarket, nah, I ain't going near a stock that's kind of illiquid with 5-point spread. What else you got, homies? Anybody out there got any questions? Let me go. You know what? I don't check. Let me go say what's up on YouTube. Maybe because I don't check the YouTube chat room. And I do invite you all to come tomorrow to the room. And here, listen, what we're going to do with tomorrow night, Solid and I get together. We can't get enough of this earnings season. We love talking about trading. Thursday nights, we get together. I put on some music around 6. If you like the Grateful Dead or Bob Marley, it's usually one or the other. 6 to 8, we just listening to music, looking at some charts. Mostly it's music. 8 o'clock to about 9:30, we come on and crunch the charts again from all these earnings reports, because we want to be prepared for options expiration Friday, where an extravaganza can happen. You know, if you get these trades right on a Friday with some options, that's where you find yourself getting into those 5 baggers, 10 baggers, 20 baggers, meaning 5, 10, or 15, 20 times your money. So if you're not on an email list, get on the email list. We're going to be toying around with a new room, so I wanted to introduce some of you guys to the new software. And just reach out to me directly. You could use Kenny Glick at AOL.com. Yes, AOL. Or info at, let me just get it right, stockmarketmedia.com. That'll go directly to Mary, and she will set you up with what needs to be set up. All right, let me just see. Stock Market Media. Stock Market. Oh, there we are. Look at this. We're live. Hey, how are you? What are these? There you go. Some questions. What are these levels from? What's the indicator? The indicator is VWAP. That's it. I am a VWAP trader. You know, I've been trading pretty much, I think it might sound funny, but since the 5th grade. You know, I was in a stock market contest and I won, and I was hooked ever since. 1987, I was dating some girl, and her best friend's father was a stock floor broker specialist, and he came home after the 87 crash, and man, I was hooked. This guy was out of his freaking mind, and I loved it. I was like, whatever you do, I want to do what you do. I want to be this freaking excited coming home from work. And he was just telling just crazy stories, and they had the sickest house, and I was hooked ever since. But you know, I've been experimenting with everything. I mean, I never even used charts when I started. It was all momentum. It was just reading the tape, level 2s, you know, and just buying highs and lows and that kind of thing, and it worked. I tried everything. The one thing that got me in trouble was my bearishness and my skepticism. I hit it big during the .com crash, And that's why I've been a shorter ever since. And it really hasn't been lucrative since. Even when we crashed in 09, I was short Bear Stearns and Lehman before the whole thing happened. And, you never expect them to go to zero. I could have retired on that move, but fast forward all these years later, shorting is just you can do it. You can play some fades, but the number one thing that you have to remember, shorting is short-lived, and you're going to die. I mean, you cannot stay short this market. It's virtually impossible if you're using proper risk management. So yeah, that the indicator, what I'm doing here, it's just candlesticks. The red lines are me. And you see how my red lines are coming into play already? Tops of candles, bottoms of candles. So these are just the roadmap. These are the lanes. So for instance, like when a stock comes out of its lane, it swerves into the next lane. The VWAP tomorrow will be the dividing lane. So sometimes the stock will glide in, if you guys ever seen planes, trades, and automobiles, you're going the wrong way. How does he know which way we're going? And they put on, well, if you haven't seen it, it's John Candy and that other guy. Fantastic movie, by the way. Go see it. Planes, trains, and automobiles. So anyway, you swerve into the other lane, and if the VWAP's there's oncoming traffic, and sometimes you get smashed into. But sometimes you swerve into the other lane, and you come back, and then you figured it all out, and then that wrong lane becomes the right lane. I'll explain that to you more in detail tomorrow, because the VWAP right now, this is today's VWAP. It's not getting the data yet. Tomorrow morning at 4 o'clock, the data starts pouring in for new VWAP. So we use today's VWAP, which is the 1 minute and prior day. And what I've learned over the last 11 years of doing it, most stocks stay in this range, like the wonderful AMD trade that got from the blue line. And usually you gravitate or revert back to. So when you have a break of today's VWAP and you have a nearby prior day, stocks tend to drift back towards them, as this one did perfectly. Took a while. Let's see what else. Standard VWAP. Yes, standard VWAP. It's the 1 minute's the standard. The orange line, the magic, the secret sauce, that's what was developed by it's a combination of Brian Shannon and Zach Hurwitz. Zach Hurwitz doesn't get enough credit. He's the one who really shoved this down my throat because he was just watching me price my own trade. So here, for instance, the AMD, right? So why did I draw the red line? Because the AMD made its way up to there. These were levels where they broke down from and pivoted from in the aftermarket. And look at the red lines. Look how it came into play. That same price from last night. I leave the line up there, and look how it got there, almost to the penny. So when Steve Martin, thank you very much. What was I going to say? Oh, what I was going to say is the more you see the motion of these stocks and, the way that we trade, we expose the rigging of the market, And at one point, I didn't want to believe it. Oh, I believe it now. And people who don't believe in stop hunting programs, believe it. Believe it. They exist. We see it all the time. You see these really blips where you see the stock spike down. What that's doing, it's cleaning up the odd lot people. That's why it's so difficult to be a trader, because the market makers are out to get you. There are stop hunting programs. The market is rigged. So the only way to battle this, to do this as a human being, is to fight back with algorithmic stylings. And that is price and VWAP. And let's take a look at SYM because it's rolling over. All right, you see that? So, and here's a perfect example of, I'm going to come in tomorrow, right? And I'm saying, hey, what's SYM? I don't know, but it's getting hammered. I'm looking to buy it, right? But I only do what the market tells me to do. That's the lesson that I've learned from getting my ass kicked for 30 years. And I've had moments of glory. That's why I'm still here. But I've generally had a rough time. That's why VWAP is just so, it's a cleansing. Trading price and VWAP, it's like a cleansing because I don't have to think, right? So I'm coming in tomorrow and I would normally look to buy this. Any reason to buy it? No. And then it breaks a triple bottom. So not only are you not buying it, short it. Because now you broke a triple bottom. And look what it did. It went from the 2665 to what? to a big fat whole number or a half number because the market's rigged, 25.50. And there's where the buyers show up. So the more you believe, and again, you don't have to take my word for it, just stick with us for a month and a half, you will see the rigging. And I always say it's like the Matrix. If guys haven't seen, and by the way, if you haven't seen the Matrix, you should go watch
You're
it.
fired.
Yeah, exactly. If you haven't seen the Matrix, yeah, get out of here. It's like not liking the Beatles. But in the Matrix, it's only just, well, I could show it to you. You know what the Matrix looks like, right? Hang on a second. I like giving examples. I wish I should have had it all ready for you. Hold on a second. So where is it? You know what it looks like. I can't find it. There it is. So what I'm saying is the Matrix, right? What does that look like to you, right? But look, something's coming into focus. Wait, what is that? What is that? Breathe in the VWAP. See how that picture forms? You should be able to see it by now. The Matrix is all just a bunch of lines and code, but the more you become familiar with it, it becomes that beautiful girl in the red dress or some lettering. And we've been sitting there staring at the Matrix our whole lives. We see it different. And once we show it to you, you'll never unsee it. Yeah, so speaking of stocks I was looking to buy, but they're not giving you a reason to buy, is Qualcomm, right? So that's where my default is to look for reasons to buy stocks that are getting hammered on earnings, because you generally do get a little comeback. No reason to be fighting this one. VWAP break, double bottom break. And look how it tested the double bottom from underneath. That's a test of weakness. It confirmed its weakness by going back to that same price and not able to get over it. New opportunity to short. So that's why we have no fear of missing out. That's why we're never, ever wanting for a trade. They just keep forming. And once you understand pattern recognition, price action, VWAP, prior day VWAP, you're set. And that's what we do. We set you up. We set you up for life while you're getting the best education you could possibly have. And of course, I do spoon feed you some winning trades. By the way, speaking of spoon feeding you winning trades, just got an email from somebody that's still in this trade, Viking. Because I was talking about IPOs, right? This is the only IPO I have seen in about, I don't know, I would say 10 years if I had to put a number on it. When it opened up, nobody sold it. I've never seen an IPO with no selling. I mean, nobody was selling it. It opened up, went up, and just basically sat there. The next day it broke highs. Next day it broke highs. It never, ever broke trend. I mean, it tried, but this is your lifetime VWAP. This is Viking. And I just want to give a shout out to my boy. At least one of us is still in it. I sold it, on that first rollover because I didn't want to be involved in the earnings. But not a bad trade. 25 got us 35. But this is a typical IPO. 25 gets you there into the 30s. 30s usually get you into the 50s. I have no doubt if anybody still wants to buy this stock, I have no doubt it's going to $80. Might take a little bit longer. The first 100% is the easy 100%. But Viking Cruise Lines, I mean, come on. No one even mentions this stock. I've never even heard anybody ever talk about this stock. Just a gold mine. All right. On that note, let me just go take a gander at the Qualcomm one more time and make sure if you're not a member of the room, get involved. We give everybody 2 weeks to kick the tires, to get to know us. And that's my story. I'm sticking to it. My name's Kenny Glick. I used to be somebody. All right. I'm sure Solid's going to stick around. I'm going to go watch a basketball game and get the hell out of my house for a little bit. Be careful out there. I'll see you guys in the morning. If anybody needs to find me, the direct is Kenny Glick at AOL.com or info@Stock Market Media, which will go to Mary, and it'll be just another extra process. But, if you just want to spend some time with us tomorrow night, I'm going to be opening up my old room. We'll all be hanging out in there as we're figuring out this transition between rooms. All right. Nice hanging out. I'll see you guys soon, and I'll see you in cyberspace. Latest on the Medjay. Hey, you hanging out? Maybe he left. Why don't you just tell me the movie you want to see? Solid, you here?
Yeah.
Oh, you hanging out? You getting
Yeah,
staying?
hang out for a few minutes.
Oh, all
I'm
right.
always intrigued by these earnings reports just to see how they,
Right on.
open up.
Right on. Yeah, look at that pie, right? So that was
Wow, that's nuts.
again
That's
a perfect example. I would never trade this stock, obviously, in the aftermarket. I don't really trade. I don't even some trades in liquid, but this thing's going to be really interesting tomorrow. I mean, I love it because stocks that are down close to 30% usually get a bounce unless they're going out of business. That 30% is a huge number. So down in 88, that was close to about 28%. You usually get a bounce, and you get a bounce to being down 20. And, again, usually down over 20%, you don't look for a full blown recovery. It would be a miracle. Maybe we've seen it. But yeah, definitely interested in this name. All right. I'm outie. Good job, everybody. Good job, Saad. I'll see you soon.
I'm a man. Enjoy your foosball game. What's up, YouTube? You still hanging out? It's crazy. I haven't. I need to figure out how to broadcast on YouTube. Hey, somebody mentioned something a minute ago. Comments regarding. See if I get my screen share to show up here. Oh, it should be showing up. What is YouTube? A special signal or something? Switch. I don't know what I'm doing. Or is there just, oh, wait, maybe, oh, I never mind. It's my bad. I didn't realize I was okay, there we go. All right. I'd hit the pause button on the screen share on my end of YouTube. So I guess you guys can see what I'm seeing now. All right. So, in preparing for these knee jerk levels, it's for me, this isn't a trading strategy in any way, but for me, because I study the matrix, I try to go out and I find where, the stocks are going to knee jerk to roughly, right? Usually that's a projection based off of um, the last quarter's earnings report and what its potential move was the last time it reported. That's where you hear kind of the phrase, hey, this thing is poised for a 6 point move or a 30-cent move or a $4.50 move. And that's usually, from where the quarter ended up, where the quarter finalized. And when you go back in time, you can go back and start looking on, hey, this is where uh, the last quarter when it reported, and then that space between when it reported last and where it's coming into earnings today, let's say, that space allows you to visualize where a stock has been trading relative to last quarter, and more importantly, you're able to look at it, and say, hey, what have the institutions believed about this since the last time they reported? Now, Pi, we don't know exactly what's going on with Pi, why it's getting crushed. It's just technically this is pie with no crust because it's getting just so hammered. But if we were to come back just recently into the last time it reported, one of the things we can do with our multi-time frame VWAP is assign it to a specific date. So in this example with Pi, we could set this back to whatever that date was. The last time they reported, the 23rd of October. So we can go and use our time management button here, take ourselves back to October, and that was the 23rd, and we want to see this on a daily time frame. Now, what that's going to do is essentially anchor a VWAP to the last quarter, and then we can visualize what the institutions have been believing about this since it last reported. So the last time they reported, they came out and said, "Hey, we're doing cool things. We're movers and shakers. We're breaking things up." Blah blah blah. I don't know what they said last quarter. I don't follow any of the news or the noise. I don't care what the EBITDA is. Neither does Kenny, because what we've realized is it doesn't matter whether they have good numbers, bad numbers. The analysts love them, the analysts hate them. It's what the institutional money believes about these ideas. And when you come into a stock and you appraise them, well, what did the institutions believe about this instrument since the last time they reported? And your VWAP signature is going to tell you all of that information. It's going to spell it out for you that there's lovers or there's losers. And when you look at where fair market value is represented relative to last quarter, that explains whether the institutions believe in this idea or not. So coming out of last quarter, you can see that, hey, they might have been saying they've got the next coolest thing in the pipeline. The institutions didn't believe in it. They're not supporting the idea. It's not trending above fair market value, where that would represent, hey, there's people willing to buy this at or above trending fair market value. And this has just been crushed even before coming into earnings today. So the way that this, sold off where it is now, the projected side of where this can go now, because it's so hammered, is the inverse potential of where it closed out the quarter and where it's potentially going to go before the institutions just algorithmically decide that, yeah, that's really all we're going to kind of get out of it. And if we look where that inverse potential is, that's right around $90.25, right? This is the inverse potential of, there's no such thing as a guy named Bob sitting in a or a market maker saying, well, we're going to take the stock down to $90.25. But when you do the math and the potential, what VWAP represents, and I'll show you this. Let me just adjust my chart here for a second so I can bring it up properly. What the hell was I going to do? Oh, I want to change that line. So I know this is a very dominant VWAP level. There we go. This 90.54. So even before today unfolded, we had an idea that, hey, if this sells off from where it's currently trading at, it has the potential to at least come up to where, the stock was trading at, well, where fair market value is on a quarter over quarter basis. But since it's selling in the opposite direction of it, where should that bottom out, and where should that look for it to start at least bottom forming? And that inverse potential is what we're looking for next. And that's going to be roughly 90.54. So I know we're going to go back into intraday now. I wanted to draw some of these levels. These other levels and lines I drew here are basically the levels and ranges that are projected based on the last time this thing had such a huge volume influx, where the institutions were taking a hold of it, where they were running it up. And earlier, I was showing some examples of what, you know, max potential is. And I was showing an example of the Qs when we anchored everything down to August 5th. And then we saw where that top line was going to be before the algorithms decided, hey, we've run it far enough for now. We're going to start to, take some profits and have a pullback. And then it's after that max potential where you find out if the buyers are really going to remain intact after a slight pullback, or they're going to give up the ghost. In this case, back in September with Pi, this thing started its uptrend. It broke some recent highs here and started a new move up. And it only got up to that upper max potential. And then when it started to sell back down and take profits, they realized there was an absence of commitment there. So this looked like it was an over engineered run to the highs. And then they knew the coming quarter was going to suck. And then once it finally came out and they found out, whatever they needed to understand about under the hood with what is this Impin J something pi, the ticker symbol, the institutions decided to dump it. So the last time that this thing had some immense volume in it, it had a nice run for a while, but then it fell out of favor on a institutional level, and it's been selling off ever since. But now that we come into this new quarter, we're waiting to find out what they really believe about it, and evidently they're not happy about it at all. They're just completely dumping it. But there will become a place where it bottoms, it bases out, and algorithmically that inverse potential from where it could go based on where earnings are to where it is now is taking us down to like this 90-54 area. And when we come back into our intraday session now, we can see that's exactly where they took it to, and they decided to pivot at 90.54. Now, this could remain a dominant area of support, but if that fails, the next place that it's going to is kind of the next macro level of a high density of volume support mechanism from the past. And that's going to be down to like 85.90. And if that breaks, it's going down here to $60 again. But it's really amazing. And Kenny just got done showing you a bunch of examples on how the market's rigged, right? Just on simple intra-session price action. It doesn't, it just, it can't be possible that we live in a free, open, um, you know, trading environment where the market determines everything. When you see prices get gutted so harshly and then they come right back to the same exact prices, it's so far beyond coincidental. It's just not even mathematically possible. We're talking like you'd have to install a quantum computer to figure out how that's possible, right? If we're in a free open market, free trade, the the auction process, the algorithms run this market. And the sooner you can learn to observe what the algorithms are basically, how they work, how they function, how they create ebb and flow patterns, not just green, green, red, doji, green, go, like old school, that chart that, you have with all of the different little buy, sell, bullish, bearish candle patterns. That's all bullshit. It's worthless. Don't even, don't even worry about it. What you want to learn is kind of the ebb and flow shuffle, the reactionary events that occur when you see an algorithmic dominant range form. And when you see multiple prices come up to the same exact area, and then they kind of get rejected off of that, then you know that prior level that it just asserted down here, in this case at 88. I mean, how is it possible you went to an exact number with a stock that's trading at closed today at, I don't know, what was the closing price? Ooh, where's the closing price? 126.55, right? Not that it's in the 50 rate, but numbers are very important, and things just don't hit exact numbers unless they're designed to do that. So at some point, the institutions and the algorithms that are programmed by the institutions got together and said, "Hey, we've got an imbalance going on here. We need to get this off our books, or we need to run this price down to a specific level to equalize what we're doing here. And where's that price going to be?" Mathematically, it can be reproduced. So when you learn how to understand how to reverse engineer the algos and start being able to draw some lines on the screen, all we're doing is, Kenny's been doing this so long, so he's Mr. Rain Man. He can look at a chart and basically do that reverse engineering in his mind and then find you know a level that corresponds to his formulation in his head. I've just taken that same concept that he taught me how to do that and then just mathematically reproduced it. And that's where I just did this with you. 90.54. It was an imaginary number that should never exist. But sure enough, where did this thing bounce at? 90.54, right? And now we're looking to trend in between this dominant range, as Kenny pointed out, More so, this is going to be more of a confirmation. This is where the algorithms want to poise it to be. There's a macro level that's more in tune algorithmically, slightly above it up here, like 109. But the benefit of knowing where these dominant algo levels are is that, hey, yeah, we have some near term um, identification of where the dominant range is because this is where the algorithms and the institutions took it to. But then we can also use some of these dominant ranges to actually confirm that, yeah, we are breaking out and we're closing the deal and quantifying the breakout by getting back over some of these more dominant, historically referenced VWAP levels. So, is there any in addition to these charts, is there anything you guys like over here at YouTube, if you're still hanging out, is there any names that you want to look at? I'll bring them up on the chart and I'll bust out the chart for you. And if you have the ability, I'll draw the lines on there and you can take a screenshot. Because I usually what I do in the chat room when you join up or come hang out with us is we have the ability to just create a chart like this, draw some lines and say, hey, here's where the dominant areas of concerns are. And then we'll drop that chart into the chat room and then you can, pull it up and mimic those lines on your screen and then see how the price action, becomes or how the price action gets negotiated around those levels. Anyone? Anyone? Bueller. Bueller. Oh, you got it, Todd. You're welcome. I was feeling philanthropic today. Some days I wake up and I feel off, right? And one of my coping mechanisms in life is when I feel a little off, I've always found that you feel better when you give. It sounds so trite, but it's true. It lifts my spirits. Just like the other day, I was grouchy. I've been grouchy all week. I think it's the weather. I'm just tired of cold, cabin fever, being stuck in the house. I want to go out. I want to do crazy shit and get out in the sun. But it is what it is. Apple, absolutely, James. We'll bring up Apple and figure out what Apple's going to tell us. A Apple. Well, first thing, when you come into a chart, it doesn't matter what indicators you have. I always try to start with a clean slate, so I clear off any lines that I might have drawn in the past. Then I want to get a look at where it's been, right? So I'll come out here and I'll say, all right, well, where the hell's Apple at? All right, it was strong for a while. Now it's kind of pulled back and it's chopping around here off of kind of a significant area here. Apple hasn't really had a recalibration in a while as far as where the price discovery has been asserted since we had that real high range break up here going into the end of the year, and then we've been selling off ever since. But if you look where Apple pulled back, it kind of came back down and said, "Hey, yep, we understand this range right here is our fair market value price." So we can investigate why these two levels are holding up there in the same place. And over a longer term time frame, Apple over the last year collectively, here's where your fair market value is from year to date, right? Or year to year, excuse me, from here all the way back to last February. But what we can also do is start to see on an ongoing basis why we started seeing it hold support here. And if you are a fan of anchored VWAP, it can be very telling. So if we come back and find the low of last year and we assign our VWAP to that 419, what is that? 4 of 19 last year, right? April and 19 on the day there. So now we have an assertion of where fair market value is relative to the most recent significant lows over the last year or so, right? And if you look at where all of these pullbacks on Apple came into, where they bounced from, this pullback here in August, which the whole market decided to roll over, but having that anchor point from that low of the year when the market, or in Apple in this case, decided to pull back, look where it pulled back to, this orange line, right? This orange line is telling you where the fair market value or multi-day or a multiple periodicity anchored VWAP is into the past. And in this process here of anchoring allows you to understand that I want to understand where fair market value is relative to a hot date or a hot period, right? So at one point when this had pulled back, you see where it got down to there. And then once it got there, it said, all right, this is where we need to buy the dip. Because if we really break below that, we're giving up the sentiment and the market can just not go down. It's not designed to do that. That's a whole nother conversation. But you know, when it comes to stocks, the best thing you want to know if you're managing a portfolio or something, you want inflation. You want the market to become inflated to run the price of your holdings up. And the understanding that, fair market value can't be breached. It can be violated for a day, an afternoon, maybe 2 days, 3 days, but a real concerted effort to break down under a very dominant VWAP signature is just it's almost illegal in the market anymore because what you're doing is you're really saying, okay, if I'm going to pull back, I'm going to pull back to this level, and I know one day, whole market's going to die. It is. It kind of has to. There will be a giant 1920s crash, and the whole everything in the world gets readjusted and reset up. But look where we just recently pulled back to. We're still obeying that dominance that the VWAP's telling us from the lows of last year. So on an ongoing basis, look where we just pulled back to now, right? So if we came into this information and we said, all right, well, on an ongoing basis with Apple, we don't want to see it ever for the time being anyway, go back below 218.67. Right? So that's going to be our new fail safe, right? From the lows of last year, this is where we definitely want to be able to assert some dominance of support in the market. Now, if we do the same thing and come off of the highs that we established just before the end of the year on 1226, now keep in mind, we're going to draw this line right here. Let's make it orange and fat. So we know this is our low VWAP signature here, 218.67. Now let's reassign our VWAP to the high side here, which is 1226. And let's put this in the time machine and go back here to December 26th on the day. Now we have a new VWAP signature coming off of the all-time highs, right? So what the significance is about that is we now want to understand is when Apple's back in recovery mode, when are we back bullish again? So now what we can do is benchmark that level right there. Let's just duplicate this drawing here. We'll drag that up here. What's our price? 235.08. 235. We'll call it 10. By tomorrow it'll be 10. So now what you've got here is you have established two very dominant ranges. Your primary area of support based off of the lows on an ongoing trend, and then the all-time high VWAP, which is allowing us to visualize when the bulls are back in charge. Now, we were slightly back in charge a few days ago, but then I think Fed news, Trump news, political news, China tariff news, whatever, caused this to we started to rally, but we didn't die. We didn't come out the bottom side of our support, but we are in this dynamic range right here. So in the short term, this is the road to recovery to be able to declare that the institutions are back wholeheartedly supporting Apple on a new longer term trend. So that what is that number? 235.10. So between 218.67 and 235.10, this is where we're expecting to live. Now, we could tighten that up just a little bit tighter and say that off of our most recent pullback, let's establish another, right? Let's give these some definitions here. So if we go, let's just give this the ATI or ATH all-time high VWAP. We'll name it that, and we'll give that a title. let's give this some definition so we know what this one is. This is the um, I don't want to say all-time low, but year low VWAP, just so we know what these dynamic levels are here. Now, let's come even tighter off our most recent pivot, right? This was this 219.38 area. What day was that? So this is 121, January 21st. So let's do our time frame shuffle game here to January of 21. Now that's going to give us a near term idea of where support is relative to that last pivot point. And that's going to establish right here, right? So let's edit that. We'll make that one orange too, right? This is our most recent low pullback area. And this is what we needed to do to recover to, or at least stay above this level if we're going to start talking about going to new highs. Now we can do that really one more time here based off of this most recent high that got put in. And then we're going to even tighten our narrowing in our channels up even more. And then watch what happens when we get done plugging this in. You're going to see where all of the chop has occurred over the last, the dominant areas of support resistance for Apple. So 247.19, what is that date? That is 131. So we'll go time frame 131. Now we have just a slightly higher VWAP right there. So in the very short term, now we have a couple of dominant levels here that need to conquer, hold, and then we get the confirmation of the bigger breakout just above it. So now when we come back in and look at, where we're trading at just on the year, or excuse me, on the intraday session, we've got a couple of very dynamic levels to showcase where we're currently trading at, what we're trying to break back above, where that area of resistance is before we can start getting back into that new upper channeling range. And if you look at Apple here, here's that all-time high VWAP. That's the coveted level we need to break to go higher market-wise. And in the very near term, you can see where we chopped around all day today, around this 230.11 area. So in addition to our kind of macro ranges where we really want to kind of continue and conquer, if we went back and even looked at yesterday, you can see we kind of got into this range yesterday. We really couldn't get out of it. And then we had a dip back down to test the sovereignty of that 230.11 area. And coming out of the open, look exactly where we opened back up to today, right into that realm. And then breaking back above that would been, hey, can we stay above that level? And we did. It took all day. We took some chopping around. And so you've got your macro levels here, but then the intraday VWAP was allowing us to visualize that the bulls are in charge right now and they're trying to fight through this upper resistance. And then they successfully closed above that today with the expectation that Apple's going to be heading up here to 233.26 again, where we hit this morning. And, we just had to shake the trees some more. So breaking back above 233.26 really doesn't leave us any other recourse other than, since we've hit that level, pulled back, showed a bottom, showed support, and now we're breaking back above it. Our only recourse is to at least test that next upper realm. And that's going to take us to 235.10 right here. So that's how you can use your multi-day to be able to just find out where or who's in control of the stock over any given period of time. And then understand there's macro, more important, high probability areas that are going to give you some recourse on you know, where at least you need to conquer and establish, who's back in control of the stock. And then after that, this is just not the all-time high, but that's your all-time high VWAP level. Now, if you want to know where, Apple's going to go in the future now, we can come out here and reassess what it's poised to do. We want to come back in here to this 260 area, right? But after we break above that high VWAP level, then it's just really easy to find where that next price, profit taking targets are going to be. On the rebound, if we can recover through all of this, we're going to have to conquer this, conquer that, conquer that. And then when we get back to 242.17, I think with Apple, if we get back to 242.17, that's going to be right around the time where the Qs decide to kind of test that high range, where they're going to go to their current max potential, right? And it's going to be at that level that I was talking about earlier with the Qs. Yeah, that's going to take us to 545.85 on the Qs. So if Apple starts getting its act together and it starts trending back, when Apple gets to, what is that, 545.85, when Apple finally gets back up to this 242 area, that's when the market's going to see new all-time highs on the Qs. But until then, we're kind of in a holding pattern, and every little step of the way here is going to be all about how we're defending and how we're conquering our VWAP sentiment indications, just to let us know the institutions are back on board to carry this market higher. So if you want these levels, I'll dial these in on the intraday here. And if you want to grab these bigger dominant prices and maybe recreate them on take a screenshot or something. Well, we know that yearly low is at 218. We've got to break back below 230. So let's just kind of get into these levels here. There we go. That should give you a pretty good roadmap on what to negotiate over the next few days. So it's going to be 230.11, 233.26, 234.23, 235.10, 235.50, and 238.90. See, I primarily just draw these lines like this for, you know, just like this, having that chart, pulling it up, showing where those dominant levels are, and then being able to drop that into the chat room. See if I can get that low bottom one on there. That's going to be the, oh my God, the world's coming to an end level. But yeah, this is where we're trading around the next session or so. It'll stay within the scope of this 228 and 235 area. See if I can blow that up just a little bit more. Just a little bit. There we go. I'll drop this into the chat room. I can't do it on the YouTube chat, but I'll put it in our other room here. Just so it's documented. Tesla, abso-freaking-lutely. I think I did this the other day. Yeah, Tesla recovery mode for Tesla when the bulls are back in charge, 395.40 or 394.40, but let's find out why. This is kind of ultimately where we're trading off of right now, and I think I did this math before. Um, this was I believe this was like an all-time high VWAP signature. So getting back above 394.40 that's really where we want to start saying, Tesla's not going back to zero. But the way this is all calibrated out right now, this thing is selling shy today. You really want to see Tesla hold this level, kind of where it closed at today. But if this continues a little bit more of a downtrend, this is going back to 367. And more than likely it held, it tried to rally, nobody was home, it tried to rally, and now it's starting to break back below this high density of volume VWAP signature. And when it breaks, You had a successful close under this dominant low here. You did get stopped. I mean, the bleeding stopped on the day today at this 378.04. So I would imagine tomorrow we're going to get a little blowdown. It's going to try to re-break back above 378.04. And if that doesn't hold, you're coming down to 367.58-ish right in here. So this is going to be our prime support. We'll make that yellow or orange. And then if that fails, we're going to chop around that number today. And then we want to see it kind of get back above here. Actually, today it's higher VWAP level, which is right about here. And we'll do the VWAP shuffle in and out of here. And then if that gives way, this is the bigger target where it's going to. So if we look at where that's all chopping around right now, even in the aftermarket, you can see this is where that dominant area of support was today on Tesla, that 381.39. And then where we kind of bottomed here and chopped around off of, gave it up, and then where we closed at, and now where we're chopping at is right around that level. So this 378.04 is going to be your dominant area of making sure that we continue to close above that. If not, we're going to break that 378.04 and we take out these lows from today. We're headed to 367.52. But it's Tesla. It's not going to break down that hard. I don't make the rules. I just reverse engineer the rules. You can have all of the bias that you want about a stock. Let me just give you the macro levels here for Tesla, and you can run them. Put those on your chart because that's where you're going to negotiate everything from. So basically just take all of these levels that are, I know some of them aren't showing up here. Hold on, let me see if I can get them to show up. Let me try something here. Studies. Let me turn that on. Yeah, we're good there. Intraday. Intraday. All my troubles seem so far away. Yeah, there you go. All of these lines here are, in the bubbles that correspond to these lines. These are your dominant levels from the macro picture right here. So let's print that out. Let's see. Tesla macro levels. There you go. The real area Tesla wants to go back to is this 346.53 area. I know it sounds absurd, right? But if it does start to sell off, that's where you would start buying the dip, 346.53. See these levels that I automatically build here when we did all of that homework of finding where the high VWAP was and the low VWAP was, and it draws a line on the screen. I've just programmed it to automatically do a significant series of those levels based off of the high density of volume on any given name from a macro perspective, just like it does on the intraday perspective, the intra-session. And it takes into account all of the current information, just like the cues right here, right? All of these lines got drawn at 4 o'clock. So they're rallying into each one of these levels and chopping at them and holding the line or failing the line and then going to the next line and so on and so on and so on. And You can do this. Anything that's got heartbeat, volume and a heartbeat. You can map out anything using kind of this VWAPian formulation. But going back to some of these names that reported, just like earlier, I drew all of these lines right as soon as QCOM came out and drew where these things were going to hold their dominant levels of support and resistance. And so far, QCOM is continuing to sell off. And there's an absence of committed buying, even though it's aftermarket here. It keeps trying to rally at one of these levels and then says no, and then folds and goes to the next one. And if QCOM continues to break down, we're looking for like 160. Probably we'll get a nice sharp dip down to 160. Then if we come back, then we'll start looking at this for tomorrow. How did our pie do? Where'd it go? Where'd it go? I know it's here. Pie. We like pie. See how pie is just kind of chopping around now? Not really going anywhere. But we have an idea of where it's going to go when it gets there, what it's going to do. Just like when pie, after the knee jerks over, that's something else too. You know, a good thing to take away from earnings reports, and it's a very valid question that people ask, is why is pre-market and post-market information important? I think it's just the algo or the institutions moving stocks around. Exactly. That's why the post-market and the pre-market are important, specifically around earnings reports. Because when you have something that's reporting earnings, the institutions are going to rebalance. They're going to crunch the numbers. Their analysts and their quants are going to take all the information and recalibrate it for their circumstances, and they're going to take the stock to a certain level, they're going to pull it down or up to a certain level, and they're going to help you establish where they think dominance will be observed. That's why when you come in and say, all right, well, we're going to hit the top of that channel, we're going to mark that off, we're going to mark that 88 off, because that's where the institutions took it to. Even on this first little downtick, that's going to be important tomorrow, 111.85, right? So with all of these historic levels now, if pie continues to get hammered, I almost want to think that, where pie's trading at right now, this is going to continue selling off down to about $70. I had 63.01, 85.90, but this 90.54 was just amazing, that even before the numbers came out, the VWAP was telling us where they were going to take the stock down to. Now, where they chop it around after that, that's what the new information is going to detail for us on, how they're going to rebound, where they're going to rebound it to, where they're going to pull it back to next. But if we don't hold that dominant level there, we're basically the 88. This is going down to at least, 70-ish. And then we'll probably see if we get the real bounce and it's going to come back to life. So it would be nice to see pie really get drilled a little bit more, and then tomorrow buy the dip and start a significant uptrend. And I don't know what the options look like on this thing. Oh, they do. They do. They only got like monthlies. So day trading monthly options is kind of impossible. But the idea would be that since these are so skewed, the price of those $70 calls, if we get down to 70 tomorrow, they're going to be ridiculously cheap. They don't even go that far. They don't even have them. They don't even make them. At least for this, you'd have to go out to like the end of March. Those are going to be just insane cheap. So we'll talk about options on that tomorrow. And by the way, just to reiterate, tomorrow we're going to do the schmooze, which is game planning for Friday option expirations. So when you have names that are, expiring on Friday and they just reported, man, that's a lethal combination to be able to get in there and hit the market and pick up some options that are, they're completely exhausted by the time the end of the week, you know, gets out. Just like options are exaggeratedly high going into their earnings report. And then all of that pressure gets released and all of the mechanics and everything get recalculated. And then you really come out now after you shake the trees, which tomorrow in this case would be the shake the trees day following something that reported tonight. All the institutions, Joe and Jim, John, Jane Trader are going to be doing what they're going to do with it tomorrow. And then at the end of tomorrow's session, when something reported tonight or tomorrow morning, to after tomorrow's session, we're going to have a really good idea of where new fair market value is observed. And if you find yourself on a Friday where current price action on a Friday is starting to break over a VWAP signature that's already, kind of been recalibrated and calculated after all of the noise. You break that VWAP signature to the upside, let's say, you've got a really good chance that you're witnessing the institutions are getting back involved and you have an opportunity to buy a very depressed option contract for sometimes around 5, 10, 20 cents, that you can get a double, a triple, a quadruple, a quintuple, and get things to 4 or 5 times your money. So that's what we're going to do Thursday night, is come in and dial in some of those probable names that are going to start showing us that type of potential and start getting game planning some of the levels and ranges that are going to start to exhibit when those opportunities are going to set up for us. And then during the heat of the battle on Friday, we'll decide whether, we're going to hit those or not. But that's our game plan for Thursdays, is to be able to define some setups that when they occur, the high probability of those trades working is in our favor, because we've already kind of seen, you know, where the better areas to start looking for getting involved in some Friday expiration, option trades are. Sim still getting smacked down. SYM, not so much. It's hanging in there. This too came down to one of these dominant levels. Now it's trading against here. Now with Sim right here, we only got, it's probably trade a little bit longer. And if we look, the velocity of the trade, it's still kind of trading, right? It's still kind of active. We've got some, it's still working a little bit. So we're getting through the conference call. Once that's done, the institutions are going to decide what they're going to do with it also. So with earnings, you get the knee jerk number off the numbers when they drop, the numbers. And then you get some guidance from when they do their conference call. And then after that, the institutions decide what they're going to do with it. This is starting to show up like, if this breaks back above 27, 25, this is going to start migrating back up into the 30s. So if this can't hold that, and you break this new recent lower registration after the CEO came out and promised everything is golden, the institutions don't believe in it, they're going to continue to dump it. And that's where you might see this thing break down a little deeper into like 23 range. Let's take a look at the Qs, what they've done here in response to the names that reported. You can look at the SPY also if you're into watching the SPY. It doesn't matter. It's going to be the same kind of idea. Coming into the close, all that dominant volume that came in, we've been trading above it. So market's on bullish territory. The SPY's headed for 605. You're going to get this thing, in the next session up here to 605, 605.50 area. And then you're going to look for, a little bit of a down move. So I would say that the SPY is going to try to run up into the 605 area, 605 50 area into tomorrow morning. And then you're probably going to see a little bit of a pullback just to test kind of the dominant area of the day, which in most cases would be probably this 60 602 area. And then if that comes back and takes out 605, you're looking for 607 basically. If we get a little bit of a rally tomorrow morning. In the big picture, though, with the SPY, where we're expecting that to hit next in the big picture, here's your forecast for where the SPY's headed next. Let me get this off of here for a second. There we go. Very much like the Qs, we've had this last 3 days of coming back. And I can just kind of tell from looking at this, we're already back above our all-time high VWAP here. So now that we're breaking above that, this is where the SPY is headed to, 608.82. That 607 intraday is modeling that out, but this is the next macro objective for the SPY. And when you break that, you're going to you're going to have trouble for a day or two getting through this all-time high. So you'll probably hit that. If we get a good strong run tomorrow, we're going to come up to this 608.90 area sometime tomorrow. And we're going to try to shoot for those highs. But I think we're going to end up chopping around here for a day or so. But once we break that, the SPY's going to 218, or excuse me, 618.25. This is where we're going, my friends. Bum, bum, ba 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 bum. Market, stock market media. Do we have a Twitter channel for stock market media? Stock market. There you are. I thought we had one here. Very cool. Fun times. All right. I'm going to make a taco. I know I say that I'm making a taco every night, but tacos are easy, man. You just burn some meat, throw some weird sauce on it, wrap it up in a tortilla with some cheese. You could have moo, cluck, and oink every day of the week and feel like you're having a different meal. It's like a protein delivery system. So I'm going to leave you guys. I'm going to take off, go make some food. But I want to thank you for indulging me and let me hang out with you guys for a little while this afternoon and talk shop, talk VWAP, and invite you to join us. Hey, listen, I was just like you at one point. I found Kenny on the internet, stumbled across him, matter of fact, by accident. And there was a crazy dude spouting off crazy theories about how the market actually works. And I was hooked. And I became a disciple of Mr. Glick and his teachings. And I took what I learned over the last decade and change and cultivated it into what I do. And I love what I do. I get to be a programmer, a teacher, a trader, a comrade, and it's been an amazing time. And I just want to give a quick shout out to Kenny. He's made my world possible. So This is the one and only place that you're going to find uh, instructional information to teach you how the market works so you can carve out your own trading strategy around it and learn to build a trading strategy that's right for your circumstances. This isn't about throwing you a fish. This is definitely about teaching you how to fish. And you come in here and you hang out in our chat room for a couple of weeks, kick the tires, find out if this environment's right for you. Great, sign up. If not, hey, we shake hands and we all part as friends and we wish each other the best. But make it a point to find a way to get signed up over the next, well, probably tonight, tomorrow. We're going to drop some links on how to find us in the secret lair for tomorrow's schmooze. So find a way, check out hitthebid.com, find out how to get signed up through Stock Market TV to be a part of our everyday, all day learning extravaganza. Because by default, this is what we do all day long is disseminate chart patterns, setups, talk about what stocks are hot and which ones are not. It's not about picks. It's about picking any name and finding out if its trading circumstances are beneficial for an entry or not. That's what we want to teach you how to do in here. So get yourself right with your subscriptions or find a way to get in and come hang out tomorrow night between 6 and 9 o'clock tomorrow. We're going to be having a little dance party, and then we're going to just talk about charts and get ourselves ready for Friday option expiration. So make it a point to find out how to be a part of our community. The people that are here are amazing, strong willed, tenacious, and we all work together as a collective Borg on how to take advantage of this market. All right. So be a part of what we do here. All right, I got to bail. So I'll leave you like I always leave you, my good VWAPians. Go out in the world and find something absolutely beautiful, place it in your heart, and then share it with someone you care about. Take a moment to share it with someone you don't necessarily care about. Hopefully, you'll change their disposition, and then there'll be somebody you actually care about in the future. And when you're done doing all of that, don't forget to always thank the universe for all of our good fortunes. No matter what the universe is in your world, give praise and thanks. And then when you're done doing all of that, go squeeze someone you love because that's the fun part about being a human being. All right. I'll talk to you guys later. Have a great, safe evening. Good night.